Hey, it's Dan Moralez. This is Homebuyer Radio, episode number 141. So this week what I want to do is I want to talk about what happens when the Fed cuts interest rates or they raise interest rates. What does that mean for mortgage money? Okay, so recently we had the Federal Reserve Bank cut interest rates by 0.25%. And so a lot of times when that happens, I have a ton of clients that will reach out to me and they'll think that mortgage rates immediately went down 0.25%. That, unfortunately, is not the case. Now, I wish it was because that would be great for my business, but it's not the case. Now, the flip side would be if they went up 0.25%, that, mortgage rates didn't go up 0.25% either, right? So when the Federal Reserve cuts interest rates, that does not directly tie to, if you will, mortgage rates. What it is directly tied to, a lot of times, it could be a credit card. If you have a credit card that is somehow tied to the prime lending rate, or if you have a home equity loan or something like that that is tied to the prime lending rate, those rates certainly can change as part of a change by the Federal Reserve Bank, okay? They do not change mortgage rates when they cut rates 0.25%. Mortgage rates, kind of like a stock, mortgage money comes from the bond market, okay? Bond market, like the stock market, can have wild fluctuations in price, from day to day, and throughout the day. So, those prices for mortgage money, if you will, are set by the bond market. That price is, if you will, fluid or fluctuates, all the time. So you can have a different rate, from day to day, and you can actually have a different rate from, morning to afternoon sometimes, depending on the volatility in the market. What happens when it comes to mortgage rates, though, is mortgage rates, if you will, the bond market trades in anticipation of what they expect, to happen. Okay, so typically when the Fed cuts rates, let's say 0.25%, most of the market has kind of assumed that they're going to cut 0.25%. So what that means is that any benefit from a Federal Reserve rate cut of 0.25%, it's already priced into the market by the time it happens. So, you have the market that's kind of working or moving in anticipation of what the Fed's going to do. They're not going to necessarily wait for it to happen, okay? Think of it this way. I always like to give people this analogy. If you own stock at a company and you know that company is going to go bankrupt, it's just a matter of time before it goes bankrupt. The stock price of that company is going to tank before it ever declares bankruptcy because it's common knowledge or it's widely known that this company is going to likely go bankrupt. So typically that price is going to be reflective of what people already know about it, and so it's what's likely going to happen. So that stock price is going to plummet in advance of the company actually going through and declaring bankruptcy. So the same thing is kind of true when it comes to the Fed. If it's widely known and widely anticipated that the Fed's going to cut rates 0.25%, the market would have already priced for those changes prior to that ever happening. So when it does happen, it's no big deal because the market has already priced that into, if you will, the current market pricing. So you don't really pick up any benefit, from a Fed rate cut, when it actually happens because any benefit that you would have from a decrease in rates has already been priced into the market for some period of time before they even cut rates. The same thing is true when they raise rates. If the Fed raises rates 0.25% like they did, not too long ago, when they raise rates, people are surprised to find out that mortgage rates didn't go up 0.25% overnight. Well, that's because the market had already priced that, upcoming, likelihood of an increase into market prices. So by the time that the Fed actually goes through and does it, it's already priced into the market where it is. So it can be a pretty, difficult thing to understand and track with. But, long story short, when the Fed does these rate cuts, it's already built into the price that's been on the street for probably some period of time. And so when they do it, pardon me, there's no huge impact at the moment that it's done. So hopefully that makes a little more sense for you. Hard to predict mortgage rates, right? Nobody can do it with any 100% certainty. The one thing that you can predict with a certainty when it comes to mortgage rates is that they will change. So I always tell folks, look at your options, look at the numbers, find the program and cost combination that makes the most sense for you. Get that locked in, and then, that way you've got some peace of mind of knowing it's not going to change one way or the other. You can certainly kind of hold out and hope that, market pricing gets better. If you feel, you're feeling lucky, you could do that, but just know that, that's a knife that cuts both ways. If you don't lock in an interest rate and rates go down, you take the benefit of a lower rate. Pardon me. If you do lock in an interest rate and rates go up, you have the protection of knowing that, rates didn't move against you. So, it can move a couple different ways, right? If you don't lock, you do lock. Just know that the rates are likely going to change after you've done one or the other, and you just have to be willing to live with whatever you get when it's all said and done. Okay? Hey, I'm Dan Moralez. Apparently my voice is very foggy today. I'm Dan Moralez with Northpointe Bank. My NMLS number is 709-729. You can reach me online at danmoralez.com. That's DANMORALEZ.com. My phone number is 616-931-4629. Do me a couple favors, okay? If you are in the market to get a mortgage, we would love to help you. If you've benefited from this podcast, you learned something from this podcast, and you feel like, there's been some value added to you, by all means, the best way you can thank us is by giving us the opportunity to serve you as a client, and we would love to have the opportunity to do that. The other thing that you can do is you can share the podcast and write a review for us. If you're an Apple subscriber, if you can go to iTunes, you should be able to do this relatively easy, and just leave a review. That would be helpful. Helps other people to find us as well, too. And if you share the podcast, of course, that helps other people be able to find us as well. Okay? Hey, I appreciate it. Thank you for listening and sharing and writing reviews, and hopefully the content has been rewarding for you. And as always, Northpointe Bank is an equal housing lender.